our broadcast by SitBlink, dialogue with the founders, and happy to have our first guest from Estonia in this format. And I'm starting with the usual question: when the idea with Income, with your startup came, and one was when was happening?
Yeah, well, thank you, Andre. Yeah, the idea of Income actually making a platform, investment platform for loans that is safe, came pretty much early 2020, maybe summer 2020. I was also investing in loans myself on other platforms, and once COVID-19 hit, then investors started suffering losses. And I have a very long background in consumer lending. I know how the institutions secure the loan investments they do directly into the companies. And then I started looking at the other marketplaces and said, nobody's doing it. And we should be, if we marry the security element to what is done at the moment, then I think we'll have a winning concept. And that's where the idea came. You know, my own money was at risk. I didn't like it. I thought that this has to be improved, and that's what we've been doing.
Okay, so but you have also the expertise in working in this environment, in the financial environment. But you can start sharing your pitch deck, and then we'll follow the questions.
All right, very good. Thank you, Andre. All right, I'll just share the screen. One moment. Okay, can you see it well?
Yeah.
Okay, very good. So good evening, everyone. My name is Kimmo. As Andre mentioned, from Tallinn, originally from Finland, Helsinki, but I've lived here for about 14 years. Founder and CEO of Income Marketplace, or Income as we call it. So Income is reimagining loans as an investment, and obviously we think that crowdfunding is a great way to have people participating. It's also a great way for us to raise awareness of our platform, and then that's why we're talking here today to you. So I'll try to explain our business model in the 10 minutes that I'm given. So anyway, Income. So we're a marketplace that enables investors to invest in loans from around the world. So what we do, we don't give loans out ourselves. We cooperate with different lending companies around the world. What they do, they list their loans on the platform, and our investors invest in them. There are two things which we do for them, so-called heavy lifting for the investors. We make sure that the investments are correctly secured by the loan books. And the other thing is, of course, simplifying the investment experience. So in order to get as many people as possible to get interested in alternative assets, there has to be a simple user interface. So that's what we're doing also. But safety is our key point, what nobody else is doing at the moment. And thus our mission is to make investing simple, safe, and accessible to everyone. We are available on desktop at getincome.com, and we're also available on iOS and Android. So for those of you who wish to try it, you can go to the App Store or Google Play Store and download the app. The app is a much more streamlined UX at the moment than the desktop, something to cater for different advanced levels of investors. So why did we choose loans? Well, my background is in lending. I know loans like the back of my hands. And in addition to that, out of all the alternative assets, we think loans are the perfect asset class to build an investment product for the masses. It's a stable asset class, first of all. So it doesn't fluctuate according to stocks or cryptos. It doesn't correlate with stock market crashes. The value of loans is what the value of the loan book is, regardless of what Tesla is worth today. It also amortizes and produces cash flow. So a 10-month loan, if you invest in one, you will usually get, if it's a monthly installment loan, you will get in 10 equal installments, both principal and interest back, that you can also reinvest or choose not to reinvest. So it's very easy to withdraw from loans and to come back into loans. The final thing is security and high yield. So loans can be secured to cover the investments in a similar way that you would take a piece of real estate as a collateral. Loan books can be treated the same way, but loans also yield highly. There's around 8 to 12% yearly interest rate that you can earn from investing in loans. So all these things combined make it actually a perfect asset class for a platform like ours. So what we do differently is really that we use the loan portfolio as a security. And that's basically something nobody else does. This slide explains it in more detail. I'm not going to go through it with you. You can find it in the materials, and then read it. And then if any questions on it, I'm happy to answer and elaborate. But that's what differentiates from anyone else. And just to mention, our technology has been built so that this is possible. So it's not just a matter of doing a legal agreement. You need to build it from ground up to be able to do what we do. And that's what we took at the first phase of the development. We took that into account. And of course, safety, the second was building the best investment experience. So really simple UX, user interface. We also have an API connection ready for more advanced users if they wish to join in, and also for institutional investors who want to just get an access to the assets. But really the simple user interface and user experience is at the forefront. And of course, safer investments. That's the main thing. Where we are today. So as I said, the idea came in June 2020. We launched in February 2021 with the desktop. With the apps, we launched maybe a month ago. We have so far raised 1 million euros of pre-seed funding. That's basically gotten us here. We have a ready product. We are in revenue, so 56,000 year to date roughly, recurring about 6,000 every month. We grow at the moment quite fast. We grow 10% week on week. Just the other day, we sold out of all the loans momentarily when demand spiked. So we really are starting to see traction. We have 4 asset types listed on the platform at the moment. We have 653 investors, actually 700 as we speak today. And about 2.6 million is invested in by the investors already through the platform. The market opportunity, and this is the first problem that we are solving as any startup, we need to solve problems. The first one is the safety of alternative investments. So that's the clear focus. But the other one is tied with the market opportunity, so that 8 trillion in household bank deposit. This money is eaten by inflation. Effectively, there's no easy way to park your money. Now, if we combine safety and good user experience, this is the amount, this is the cash that we can tap into by allowing people to park their money easily into an easy app or easy platform that is backed by real assets, such as loans. The other thing is, of course, retail investments. They're booming, more so in US, but also in Europe. And usually Europe follows after US. So there's a huge demand for alternative investments, crypto, stocks, and that is only growing. So that's the market opportunity. But it's also not just the market opportunity, it's also a timing. The growing demand from investors that I just mentioned is actually a trend that is converging with another interesting trend, and that is the global alternative finance growing. P2P platforms, fintech lenders, non-bank lenders, especially in emerging markets, alternative lending is growing very fast. And when these two trends converge, we think this is the perfect timing to actually launch a platform such as ours. Our growth, we will use the funds we raise in this round to loan originator and investor onboarding. So that's growth related, to team development, and to IT development. The loan originators today on Income, Dana Bishak from Indonesia, Yritysrahoitus from Finland, ClickCash from Brazil, and Finto Capital from Latvia. So quite a varied bunch of loan originators, but it just highlights the fact that we can actually onboard from any part of the world and do the localized security structures. Over 100 potential loan originators are identified, 19 due diligences are in the process, and our pipeline is growing very fast. So we believe that we will be able to onboard quite a nice pool of assets very, very fast. We run a business model, a platform business model. So basically we charge the companies 2 or 4% fee for any investments they put in on an annual basis. So if we have 100 million euros of outstanding investments, we earn between 2 and 4 million euros of revenue every year. Potential, of course, is much lower, much higher. Our, let's call it the leading European platform, has about 450 million euros in investments at the moment. The leading US platform for alternative assets is probably turning billions already. So the potential for growth is there. For investors, investing is free. The financials here, very aggressive growth plan.
Just to be aware, 1 or 2 minutes if it's...
That is fine, I'll be able to wrap it up.
Okay.
So the financials here, you've seen them. What we're saying, we can actually reach break even if we wish to pause growth by the end of next year. And finally, the talent slide. So that's myself. Mick is our co-founder and general counsel. Legal side, Stan, a former PwC and Ernst & Young partner for finance, and Yuri, our CTO for tech. And that's it. Thank you. And if you want to read more about us, the social media links are also there. So thank you.
Thank you. So you were quite on time. Sorry for
no, that's very good.
And have you prepared any product demo, or it's not necessary now? So
I don't have a product demo now at the moment, but the mobile app is the best way to feel how easy it is to buy loans. So for those of you who wish to try it, download it, see how it looks, how it feels.
They can find it both in iOS and
yes,
Android.
It's available both, and the desktop experience is available at getincome.com.
Okay. So yeah, that's.
If we have time after the questions, I can show also the product.
Oh, okay. So the audience now is your turn to ask question for Kimmo. About income in the Q&A module, where I will take it from there for, or if you prefer in chat, but it's better there because I have I could manage them better. I will start with one. It's more technical. How do you secure the loans that you are offering on the platform? How do you yourself as income, how do you ensure that everything is right with on the legal framework?
Okay, so it all starts, of course, with the due diligence of the loan assets. So we establish what is the, in layman's terms, the cash value of the loan portfolio that will be placed on income. In a similar way, if it was a house that was placed, you would need to value the house at a certain level. So we do our analysis on that, and then we know what is the cash value of the loan. And then, for example, if I take the example of Indonesia, what we've done there is we've established our own SPV, special purpose vehicle, to Indonesia, that basically acts as a fiduciary for the, meaning that in the interest of the investors, it collects the cash from the loan originator, it distributes the cash to our investors, and then returns the excess cash to the loan originator. And then, of course, there is legal agreements, legal structures, which we go through with the local lawyers to make sure that they hold in every jurisdiction. Because of multitude of different countries on the planet and different regions, we need to localize these structures. But once they are there, we can, of course, onboard more than one loan originator from the same region.
Mm-hmm. Actually, we got questions in the chat, but I'm not asking you to transfer them in the Q&A, but it's better to put it there. But I will take it from here. Who is responsible for the KYC of the people contracting the loans? Okay,
so basically, we operate with the loan companies. So the loan companies do the KYC. The loan companies do also the giving out of the loans to this to the local borrowers. The loan companies do that according to their own risk models. Of course, in the due diligence, when we analyze the loan companies, we want to see that they are on a sufficient level what they do. But usually that is also apparent, the quality of how well they give loans, who pays, who not. That comes out first when we look at the loan book, how well is it performing. So and the reason why we chose this model instead of ourselves giving out loans is because it enables us to scale faster.
Okay, and another question that came on chat. Are the loans addressed to individuals alone or to the businesses as well?
It depends. So for example, the Finnish loan originator loan company we have listed is giving out to small and medium enterprises in Finland. In the Indonesian one is giving mostly to consumers, but also to small entrepreneurs. And the Brazilian one gives out to consumers. So it depends. It doesn't really matter. We can onboard both types of companies. We can onboard companies that give out the car leasings, anything with the cash flow we can analyze and onboard. So it doesn't really matter. What matters is the quality of the loans.
Okay, and how the process is, so that came on chat, another question, how the process is designed. It's making a comparison also with what we are doing with the SPVs, but do you use SPVs in each market, or how is the process, the operational process?
Yeah, it's a localized structures. So for example, for the Finnish one, we don't have a Finnish SPV separately. It's done through an Estonian SPV because we're based in Estonia, and in EU, when money moves in euros, that's relatively simple. For Brazil, we have our own SPV, and also for Indonesia.
Okay. What are the main differences between Inca marketplace and other similar platforms or services?
Yes, the main difference obviously is the security. That's the main differentiator. Most of the marketplaces have already dealt with the problem of does the loan the borrower not paying, and that's usually covered by what they call a buyback guarantee. So when a loan is late for 60 days, the loan company buys it back, and this is actually insulates the investor who's investing in loans from the default of the borrower. But what nobody has addressed on these marketplaces is what happens if the loan company gets into trouble. That's what we are addressing. That the whole process has been built to guard the investors against that situation.
Mm-hmm. About your expansion plans, what other countries are you preparing for launching or to get loans from? Do you have a clear timetable for the international expansion?
Yes, so basically, like I said, we have about 100 loan companies in the pipeline. Out of those, about 19 are in due diligence process, meaning we're analyzing the loan books and looking at them. But in principle, I would say the next few ones will be from Southeast Asia. We will be having probably some from Poland, large European market, and then also South America or Latin America.
Okay, in the closest region, do you face any particular competition for the same product, not the same approach, but for the peer-to-peer lending that you are facing, or?
Well, yes, of course. I mean, there's a lot of marketplaces and a lot of opportunities to invest. We're not really competing just against the similar marketplaces. We're also, of course, competing for the attention of investors in general. So yes, there is competition. What we think, though, is that we are unique enough in our approach. A lot of investors got hurt in 2020 on the existing marketplaces. We think that this approach will be the winning one, and in the end, we would expect that even the other ones will have to start adapting to more security towards investors.
And can you disclose some details about your portfolio of investors so far? What they are looking for, what kind of loans they are preferring, how they are structuring their interest to invest through your platform?
Sure. So effectively, average investor today has about 1,700 euros invested on our platform. We see it's growing about 6% per week, the amount. So people are testing, and then they're increasing the bets, what they're putting on, or their deposits, what they're putting and investing in loans. pretty standard approach from investors. They start small. Once they see everything works, they keep increasing it. We do see a big interest towards actually Indonesian loans because of their shorter duration, and then also because they yield pretty well at 12%. But it's at the moment it looks like interest is actually quite widespread, because like I said, we almost sold out everything a few days back. So those are maybe the insights what we're saying. In addition to the normal retail investors, we have a few institutional investors already testing also with a few tens of thousands, and once with the idea that once they are happy and see everything works, then they will also increase into larger amounts.
Okay. I think until we get another question, we have time for another couple of questions. If you can, it could be a good timing for sharing
Okay.
what is the user experience on.
Yes, I will do so now.
On the desktop platform, yes?
Yes, this is the desktop platform. Let's see. Can you see it?
Yeah.
Okay, so it's fairly simple. I'm just checking. Effectively, overview of the investments. You can see pie charts. You can see on how much has been done there. If I go to invest, I can see here the investable loans. I can take a look into the loans in themselves. I can see that, okay, the breakdown. I can see here the borrower info, limited, of course, to the privacy issues, but still payment schedule, investment breakdown, how much different investors have put in there. If I go back, I could put, I don't have any cash on this account now, but basically I would tap in here. I would put here 1488, for example, click here, and I could just buy the loan. After that loan has been bought, it would appear here in my investments, and I could read the agreement here, and it would show me basically how much have I invested in each loan. I can export it to Excel. There's a whole lot of things I can do to filter it for advanced users. I can also set up from invest and go to automated investing. I have different strategies which I've set up here for my account. I can basically set up an automated invest, which means that I don't need to come and every time do the manual ones. I would create a new strategy and choose kind of a robot for investing according to my needs. So that it is actually in all its simplicity. Deposit withdrawal function is of course here, notifications, agreements, account statement, where you can get to see how it takes a bit of a time for it to load. Lots of loans. Here you can actually see how much you have earned and how things work and so forth. Yeah. And then
can you share with our audience what is the flow for the taxation part for the gains on for the interest the investors are gaining?
Well, it depends, of course, on the country itself, where the investor is a tax resident. So, and of course, if they are a private individual or if they are investing through a company, so we allow both. So effectively, depending on it goes, of course, under capital gains tax, but that depends on the local jurisdiction. What we are developing now, as the year is coming to an end, we are developing there a sort of an easy account statement for the investor just to download so that they can see how much did they earn at any point.
Okay.
Yeah.
And I think we have one last question about your experience that it was briefly mentioned, but if you can share more about or come back to the slide with the team.
Absolutely. Just give me a second, I'll share.
And also a question from me, if possible, an additional question to tell more about your lead investor in the round.
Okay, very good. So yes, so my track record, 15 years, 15 already, is pretty much in fintech lending. We built a business. I built a business in Poland, Finland, and also been part of a business being built in a bank, actually being built in Indonesia called Amar Bank. So Tunaiku is the lending arm. 5 years ago, we started that project as a JV. The bank listed in an IPO at the start of 2020. Quite a very successful project. So I know loans pretty much like my own hands, and that's the experience I'm bringing to the table. Do you want me to go through the rest of the team as well, or?
Not necessary. Yeah, it's fine. But about the lead investor, I think it would.
Oh yes, and about the lead investor in the round is called Tolerant Fintech. So it's the fintech arm of Tolerant. Tolerant is a Singapore-based conglomerate, very big in emerging markets. Their annual revenues are roughly 1.2 billion USD, so very sizable one. Why they are interested in fintech is that they see that it has the power to transform, especially in emerging markets, the economies where traditional banks cannot service the local population. And thus we fall also not just as a financial investment, but also in a way as a socially acceptable investment into their book. So we have a very good synergy there.
What kind of products, the main products the conglomerate has?
Well, they do
as a fintech.
Well, they do three things. If I take it a bit wider, they do infrastructure. A very big investor in an African port, for example, in Nigeria, hundreds of millions in there. They do food products in emerging markets, and then in fintech, they own the bank that I helped them to build there, or we helped them to build. They also are looking at expanding into other emerging market countries with fintech lending, with banking as well.
Okay.
So part of their main strategy is one of the leading points of their strategy is fintech.
Mm-hmm. Good. I think here we are with this part for income. Thank you, Kimmo, for the open discussion.
No worries.
And please stay with us until the end of the broadcast, because we have a special question at the end for both of the founders present today.
Very good, for sure. Thank you.
Thank you. So, Andrei, we keep on talking in English.
Yeah.
Welcome again.